Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar found another very volatile night after the market took the challenge to the top side of the range around 72.50-80 area and was rejected. As you can see from that region, the market is harboured by the bears and the ambush came in rather heavily, but not quite denting the market as much in terms of the technical aspect. However, there is a bit of divergence here. I do anticipate from the rejection the bears may actually come in today and see another down test towards the first support seen at around 72.15. The euro took a stab at the level of 111 but didn't close under there, however still remains somewhat heavy. There is a strong ADX to support the bear case, and also the recent rejection from the RSI supports that the market can actually look further down to the potentially of low 110. And if we see a close under 111 from a New York base, then the broader picture looks towards 107.50-80 area, which I do anticipate will eventually be achieved. Dollar yen took a stab at the 114.70 level and was respected. Nevertheless, the yen strength is still holding, and that is, or continuing, and could see a break of this level. However, I feel the market will probably find profit taking emerging from 114.10-15 area. Well, after the recent 2 days of gains, the pound sharply returns to the bear case and crashes lower back towards that spike that we saw a few days ago to the 133 to about 132.5 area. The market is still somewhat weak, and I still hold a somewhat neutral view due to the lack of upward strength, and the fact is that we didn't clear that level of 134.70. I'd rather sit out for the moment because the market's still likely to be a little bit more whippier in terms of direction, and until we get a firm case from the indicators, could see another down test. Sterling Kiwi, although I was neutral from the target reached at 198.5, has progressed further to the downside due to the legs that being of the sterling weakness. I still want to sit out for the moment due to the extreme oversold condition, but the ADX is still trending. Looking at it as somewhat of a target, we could see a market move now to about 195.5. I don't have a strong view on that, but I'm just looking back on recent history, and it does imply that we could see this support challenged, although we are, as I said, extremely oversold, and I do anticipate a rebound very, very soon. Very strong price action back in gold due to the safe haven demand, and the market surges higher back towards that spike, or close to it, with 1,950 being the top for the intraday high. Still could see a small test up if the fact is that the market is still somewhat nervous between the situation of Russia and Ukraine. Still, keeping an eye on this RSI, there is a divergence there. So in light of how strong that 100-point drop was, I can still expect to see that again because the ADX is overheating. And as I mentioned, the divergence and the uncertainty to gold's rally at these highs are not supportive. So the market may actually take another downturn back towards that support seen at 1,878. And oil broke through that $100 barrier and now trading at 104.80. I don't have a view on the top side due to the driven on the conflict between Russia and Ukraine. So I'd rather stay neutral at this stage. As quick as the market can rally, it can completely erase all these gains on the next step. So I'd rather find this market's way too volatile to trade at the moment. Well, that wraps it for the morning. Thank you very much for joining me, but please join me later for the afternoon wrap and keep an eye out for the intraday report.